Hello traders, this is Rich from TradeSight. This is a look at our market preview for the coming session. This is going to be for Friday, August 2nd, 2013. The key consideration going into this session is that we're going to begin the non-farm payroll number. That's the big monthly government figure before the open at 8:30 in the morning New York time. So this today was essentially the setup into that, and today we definitely saw more risk-on type activity, and definitely the shorts trying to retreat and take their bets off the table. We saw the all three sides, the ES, the NQ, and the YMs higher on the day. The advanced declines were decently positive, but certainly not a knockout. And the New York trend closed very, very low in the day after being very positive. Closed under the 0.5 level, so that's definitely going to have some implications going forward. So let's dig down right into it right now, and let's get into the current design of the ES futures contract. And here's the ES futures. You can see that we finally left this little trading range that we've been trapped in for all these days. We're holding above the 10 EMA. We pivoted and finally got a little distance and relief above this 8 ace level, which had been really just drawing the market down so hard, as it often does, and that's fine. But what we did do on the day was we did make a new high on the move, and probably more importantly, a new high close on the move. We did touch that plus 1 ace level, so 1703 is your near-term level. If we continue higher again in the next session, the plus 2 ace level at 1718 and 3/4 is going to be very prominent. That's one of the big numbers in the Murray math box, and definitely should be able to influence price to the downside. If we retreat back to the downside, obviously this 8 ace level, 1687.50, and then the 10 EMA are going to be key support to the downside. CCI is hooked up here to the upside, but is definitely not overbought, and definitely could have some more upside potential. All right, now look at the NQ futures. The NQs have been relatively much stronger than the broad market. We had already punched out a new high on an intraday basis and a closing basis. What we did in today's session, though, is we tagged that 31.25 area, which is that 8 ace level. This is a very important level. Also note that we are 12 days up in the Seeker countdown. So if we have another strong day tomorrow, we could get that exhaustion signal. A couple key things about the exhaustion signal potential. Here's your day 1. Down here in the area of the 4 ace level, we've spanned all the way up to the 8 ace level. So we do have some decent range expansion to the upside in the countdown phase, which is the 1 through 13. So if we do record that before potentially recycling, we're going to have a strong signal in place. Also, it's going to be buffered by anything that goes up and above. That signal is going to be into this overbought territory on the Murray math box. So that's another thing that would be in favor of that signal. So if we continue up tomorrow, two levels to watch: 31.64. Then if it's a runaway day, 32.03 is the plus 2 ace level, which will be very strong. Intraday 31.25 is still going to be key to the downside. We did leave a gap. That gap's open at the 7 ace level at 3,086, call it, and then below there we're going to have support at the 10 EMA coming in about 30.70. All right, so here's a look at the TLTs. TLT did break to a new low on the day, also new closing low as well. So we're definitely seeing risk put on here, and the the shelters of gold and fixed income via the U.S. Treasuries is definitely still under assault to the downside. Next support on this is going to come in at just above 103, and then the big number is that 100 level, which in terms of a bond move is a very big move. So keep an eye on that. Those are the key levels. Reversal won't really be had until we reclaim this 10 EMA. Note that this Seeker countdown here has failed. This the risk line here, the magenta line, is now dashed, indicating that the chart never pivoted back in the direction of the signal. So we've got to be careful of that and make sure that we understand that we do have a failed signal here. All right, the cumulative advanced decline lines are still mixed. Turn your attention to the lower one. This is the Nasdaq side. We've reclaimed the trend channel here. We're threatening to lose it again here, but we got back up in there, so that's definitely a positive. On the New York side, though, the upward trend had been broken. We have not recorded a new high yet on this, and that's definitely going to be a very important development if and when it can happen. I'm going to put this on the chart. I'm going to leave it there now. So here's a look at that prior high. We really need to take that out here to show some broad-based strength in the New York side of the market. If the Nasdaq continues higher and remains positive, that's really, really strong for the S&P side. However, if the S&P side just refuses to cooperate, the Nasdaq side will more than likely fail. All right, guys. The book call ratio remains kind of benign and neutral, so I'm not going to bother you with the details of that chart. The 10-day trend, though, did take a good hit to the downside. We didn't record a new low, but we did record a very, very low number that's going to be in the average for another 9 days going forward. That 0.49 close today was real strong to the downside, and definitely could put the 0.85 reversal threshold in place sooner rather than later. So just have to see if we can get another couple of weak readings, and if we do get those low readings and get that 0.85 reading, along with potentially a reversal warning from the TradeSight Seeker study on the NQ chart, powerful combination right there, very powerful. All right, guys, here's a look at the S&P divided by the TLT. This is our ratio chart. The market was fairly strong today, up 1%, but the bonds were extraordinarily weak today. The TLT was down more than 2% today. So what this did was this really just rocketed this ratio to the upside. Remember, this is the S&P divided by the TLT. So this just exploded to the upside. While it did so, what it did was it tagged the upper band of this trading channel that we've been working in since the pivot late 2012. So right now we're up into that area where the risk on, risk off kind of starts running into that headbanger, that wall where they put a lot of risk on, and now they are going to have trouble following through. So definitely be aware of this. We started getting extreme here today. It was a one-day event really that really just loaded this thing up this way, and this is definitely going to be a little difficult to shake off, and it will probably require either just some sideways action or some more normal relationship between the two. So right now, this chart is saying that the broad market is a bit overbought, and the treasuries are pretty decently oversold, at least relative to each other. All right, so here's a look at the individual sectors ranked from best to worst. Today the transports came on very, very aggressively, plus 3%. That's a big move. That's a very, very strong day, and that's exactly what you need to see later in the cycle. At the after a bull market has been in effect for quite some time, you really want to see the transports come on. You also want to see the energy type names also coming on at the expense of some of the classic early cycle stuff like the semiconductors, the BTK, or the banks. So let's see where everything ranks here. The banks are fairly high in the index, which isn't necessarily great. Transports were strong, so we can check that box. The BTK was also strong, which is not necessarily what you want to see for a sustainable rotational rally. Gold and silver was at the bottom. Gold and silver at this point should actually be picking up as inflationary pressures start to develop, as an expansion starts to really kick in. This is definitely a little bit mixed up here today, so this is not a classic day by any stretch. All right, here's a look at the multi-sector daily chart. This is kind of the graphical depiction of the majors. You see that the XAU was weak, acting as a source of funds. The semiconductors were very strong. The BTK was strong. The banking index, which is the BKX, the green line here, was not a terrific performer, but definitely risk is being put on ahead of that non-farm number tomorrow. All right, so here's a look at the individual sectors. Here's the transports, Dow Jones transports. Big move on the day. You can see that we cleared this 8/8 level, cleared the plus 1/8 level, and settled in between 1/8, plus 1/8, and plus 2/8. This is definitely in the overbought territory. on the GAN box. We had a pretty serious spike in the CCI. We're above 200. Didn't get above that plus 250 terminal area, but we're pretty darn close. Moving on to the BTKs, the biotechs closed at a new high on the move. Intraday didn't quite get up there to make a new intraday high, but it is a new closing high on the move. We've kind of resolved this little pattern in this kind of consolidation area. We've got the 7/8 level right at hand here. Above that, the 8/8 level is going to be the big one. That's at 2250, and you can see in the count we're 8 bars up in the Seeker countdown for exhaustion. So we definitely have quite a few days to work with here to get there now that we've made this pivot to the upside. Semiconductors, the stocks were fairly strong on the day. We got to the 7/8 level. The next big level is going to be this 8/8 level at 500. That's going to be obviously a new high close and a new high on the move. This did not make a new high close or a new high on the move, so essentially we're lagging NASDAQ because NASDAQ, the NQs, did make a new high on the move. To the downside, we did leave a gap, so that gap is going to be obviously in play if we start to roll to the downside. 10 EMA is going to be support, 479 call it, and then the ultimate gap fill at about 478 is going to be the next real support if we do roll to the downside in the SOX. XAU was last laggard. Keep in mind it just nudged below the low of this little trading range. So this definitely could be something where we want to keep our eyes open for shorts. This little gap is still open. 94 3/4 is the level that fills that gap approximately. So be aware and be ready for that. All right, one more thing to keep an eye on. JJC, which represents copper. Not everybody is entitled to copper futures. So I want to put up the ETF that represents copper. We did have a 13 exhaustion in the Seeker just a couple of days ago, so we could potentially pivot back up here and make a run. Right now we're still range bound. The Seeker countdown was fairly lateral. Here's your 1 bar, and your 13 bar didn't really span much to the downside, so it is fairly lateral, but it does have that timing perspective and that timing value to it. So just be prepared if we do settle above that 10 EMA, I'm sorry, the 50 simple, the red line, that would definitely be an indication that we're starting to turn trend here. And the news out of China with the better, more positive Chinese PMI definitely could be something that folks are pointing to and looking to use to get on board this trade. All right, folks. Well, keep in mind again, tomorrow is the non-farm number before the open. It's going to be Friday, deep into the summer, so it could be a little burst of energy, and then we could definitely see volume dry up. So be aware of that and trade accordingly. Thanks for listening. This has been Rich for TradeSight.